Good everyone, welcome to Pip Fanta, the channel where we don't chase hype. This is the channel where we trade with logic. So if you're tired of blowing accounts, tired of following signals that don't work, and tired of feeling confused in the market, you're in the right place. Today we are going to talk about the difference between seeing a setup and taking a trade. Most beginners think trading is simple. You see a setup, you enter the trade. But that thinking is exactly why many people lose money. Because seeing a setup and taking a trade are not the same thing, and until you understand the differences, you will keep entering trades that look right but feel wrong afterward. Everyone sees setup, but let me tell you something most people won't. Seeing a setup is easy. Anyone can draw lines, anyone can spot a pattern, anyone can see a breakout or a rejection. That is why social media is full of charts. But if seeing setup was enough, everyone would be profitable. The truth is, seeing is common, execution is rare. A setup is just information. You see, a setup is not a signal, it is information. It tells you what might happen, where price could react, where attentions should be. But it does not tell you when to enter, how much to risk, or whether conditions are right. Beginners treat setup like instructions, but professionals treat setup like questions. Why beginners enter too fast? Most beginners enter trades emotionally. They see a candle move fast, price touch a level, a pattern forming. They got excited and they rushed in. Why? Because they are afraid of missing out. They are trading the fear of regret, not logic. But the market doesn't reward speed, it rewards patience. What taking a trade really means? Taking a trade means you've answered key questions before clicking buy or sell. Questions like, is this the right time? Is risk clearly defined? Is this trade planned or impulsive? Can I accept the loss if this fails? If you can't answer those questions calmly, you are not taking a trade, you are reacting. Professionals are patient. To them, timing matters more than hype. They skip more trades than they take. Here is something beginners don't expect. Professional traders skip a lot of setup. They don't trade because something appears. They trade because everything aligns. They understand this. Not every setup deserves a trade, but every trade must come from a setup. This mindset alone saves accounts. The space between setup and entry. The hardest moment in trading is not analysis. It is the pause between seeing a setup and deciding to act. That pause is where discipline lives. That is where you decide to wait, to reduce risk, or to walk away. Most losses happen because that pause is ignored. Why fewer trades create better results? Beginners think small trade means more money. Professionals know fewer trades means better focus, clearer decision, and less emotional damage. Trading is not about being active, it's about being selective. The market will always be there tomorrow, but your capital might not. Here is the shift that changes everything. The real shift happens when you stop asking, is there a setup, and start asking, does this setup deserve my money? That single question separates traders from gamblers. Understand that seeing a setup is knowledge, but taking a trade is responsibility. When you learn to slow down between the two, your trading changes. Not because the market changed, but because you did. Every setup is visible, but every good trade is intentional. Subscribe to Pip Fanta and learn how to trade with logic, not emotion or impulse.